to a host of factors, including one of the highest gasoline taxes in the nation, my constituents pay some of the highest gas prices in the nation. In fact, just yesterday, the American Automobile Association website showed that gasoline is more expensive in my district than it is in Manhattan. In both places, gas is at least 50 cents a gallon higher than it was at this time last year. Already, reports are showing that Wisconsin residents may soon be feeling even more pinch due to rising fuel costs. The Capital Times in Madison reported that freight truck drivers are feeling the weight of higher diesel prices, citing data from AAA Wisconsin that shows diesel averaging $4.08 a gallon, up more than 50 cents from just last month. The story correctly notes that about 80% of the goods shipped in the U.S. use diesel-powered trucks. The truck drivers are feeling the pinch, but it is being passed on to all of us. In fact, the high price of oil is one reason why my local investor-owned utility, We Energies, is asking state regulators to approve a rate hike. It's not surprising that gas and oil prices are going up. Worldwide demand is skyrocketing, too. Not only is there an increasing need for energy resources in this country, but countries like China and India have energy demands that far exceed their historical needs. One thing we know for sure is that the worldwide demand for energy resources is going to keep growing in the future, and that we need an energy policy that will allow us to meet those needs without slowing the economy. Last May, the Select Committee had a hearing on rising gas prices, where we heard of the big impact that the oil and gas companies have on the economy. Everyone knows the impact that gasoline can have on goods in the market. But we also heard that these companies create a lot of good jobs, and their expanded investment in market-driven research and technology only serves to create more jobs. The oil companies that we'll hear from today are going to be called on to help meet the rising global energy demand. Naturally, they're looking for new sources of traditional fossil fuels, and it's my hope they will continue to bring these new energy sources online. Unfortunately, many of those sources are on unstable parts of the world with unsavory leadership, places like Nigeria and Venezuela. But from their testimony today, it's clear that the oil companies are looking for new sources of energy like wind, solar, and biofuels. There's a growing market for these new technologies. These executives know what the future holds, both from their own studies and from groups like the National Petroleum Council. They know that their companies will have to be able to draw on diverse sources of energy if we're to meet the rising
Wisconsin, Mr. Sensenbrenner.
Well, thank you very much, Mr. Chairman. One of the things that I learned when I got to Congress is that we don't have the power here to repeal the law of supply and demand. Obviously, demand is up, particularly as a result of the increased demand in emerging economies like China and India. Supply is restricted, partly due to the fact that we have not been able to build new refineries in this country to increase supplies to consumers. And then as a result of our low interest policy, which we need to prevent a complete collapse of the housing market, you see the value of the dollar tanking on overseas markets, and the OPEC nations who do sell us oil aren't going to want to get paid in cheaper dollars. Now, with all that on the table, and not too much we are able to do about it, either in Congress or on your side of the table, what do each of the five of you think is the single most important policy that Congress can make to increase supply and thus take the pinch off of higher prices? You can start, Mr. Simon.
Well, Congressman, I don't think there's any silver bullet here or any.
Well, we know that, but I'm asking you to prioritize. And I got 3.5 minutes left, and you got 4 colleagues that want to speak.
To me, it would be to open access to supplies that are currently off limits. We have 31 billion barrels, 105 trillion cubic feet of natural gas. That's enough to power 10 million automobiles and heat 15 million homes here in the United States for over 100 years.
Okay, Mr. Hoffmeister.
I think the Congress should look at short-term, medium-term, and long-term solutions in a comprehensive strategy that would take into account everything from more access to the new and developing technologies of the future. If we don't look at it short-term, medium-term, long-term, we will suffer enormously in the next several years from a continuing shortage of hydrocarbons.
Mr. Robertson.
There's a lot of things that the Congress can do. I think, starting to lead an efficiency message to the American people is the first most important thing. But after that, I think we need access to all kinds of energy supplies, renewables and oil and gas. The single biggest thing, I think, would be to open up the 85% of the offshore acreage in the United States that's currently unattainable. I think it's unrealistic to ask the rest of the world to open up their areas without us doing it the same ourselves.
Mr. Lowe.
Yes, we need to support all forms of energy, but particularly, as my colleagues have said, we need more access here in the United States.
Mr. Malone.
Congressman, access is number one, but I would also emphasize the huge potential that sits north of us in Canada, as we have the Saudi Arabia of North America sitting there ready to provide us with needed energy.
Okay. Now, that all being said, I guess the common thread that I've heard from each of you is that we need more access. You've all alluded to where the access is. If you got the access, would you have the refining capacity to be able to increase the supply to the consumer and thus at least take the pressure off of ever-increasing prices? We haven't built a new refinery in this country in 30 or 35 years. So if you have the access but you can't refine it, how do you get the product to the consumers at least the same price, if not a lower price? Why don't we start with Mr. Malone?
Access, for example, two of our projects are to expand our existing refineries with the use of access being allowed on Canadian heavy crude. Both of those, that will result in something like 2.2 to 2.5 million gallons a day more gasoline. So physically, we can expand our refineries, which we've been doing for years.
Mr. Lowe.
Yes, we're spending billions of dollars to expand not only the capacity of our refineries, but also the capability of our refineries to run these heavier crudes. But we've encountered significant difficulties. Even though we're trying to increase capacity and produce cleaner fuels, we've encountered significant difficulty in permitting these projects.
Mr. Robertson.
The U.S. use of oil in the last few years has been about flat. So if we produced more oil and gas, and if we push more oil and gas in the United States, we'd have to import less. We have the refining capacity in the United States to deal with the market today, I think. So I think the issue is around if you produce more oil in the United States, it's more on the world market, prices directionally are lower, we import less. We can
Mr. Hoffmeister.
I mentioned the $7 billion investment that is currently ongoing in Port Arthur, Texas. This will more than double the size of a refinery and take it to over 600,000 barrels a day, one of the world's largest. I think we have the refining capacity to meet future demand.
My time is up, but can I ask Mr. Simon to put his 2 cents worth in?
We have expanded our capacity at a rate 50% higher than industry. We do not think we'll have any issues in terms of continuing to expand our existing capacity sufficient to meet demand in the future.
Thank you.